Now we are starting the first lecture on accounting for stock exchange companies, and we are now handling or going to explain how transactions in the stock exchange market are carried out when the investors are either Arabs or foreigners who must pay in dollars, not in Egyptian pounds. And so let us go and imagine that we have some clients. We have some clients who are foreigners and Arabs and are going to approach a stock, an SBC, asking for carrying transactions in dollars. The first step is that they have to open current accounts, credit current accounts with the SBC. And these current accounts have to be started in US dollars. And here the point is that when they are paying in US dollars, these dollars have to be translated into Egyptian pounds in the general journal. And so we can imagine that we are going to debit cash account in dollars and credit current account for every client in dollars. And under each one of these debits and credits, we have to write down between two brackets the translation, how many dollars multiplied by which exchange rate was prevailing on that day. Let us have an example about this story or this kind of transactions. Assume that we are going to have an Arab or a foreign investor who has bought on any day, say March 1st, 2017 or 2019, whatever it may be, 550 shares of CIB Bank. Its writer code is COMI.CA for LE 55.06 Egyptian pounds. And the exchange rate, it was at that time, it was in piasters, it was 1775. Notice here that the exchange rate is mentioned not in Egyptian pounds but mentioned in Egyptian piasters. BT is the abbreviation for piaster. And therefore we would like to compute the equivalent in US dollars that has already been purchased. Let us go and see the answer. How will it look like? Here the equivalent in US dollars equal 550 shares by LE or Egyptian pounds 55.06, and this multiplication result is divided by the exchange rate for the dollar, which is 1775 piasters. This equals 30,283. This 200, the multiplication, the result of multiplication is divided by the exchange rate, which is 1,775. This equals, in dollars, it equals 1,703.50 cents. In addition to this, of course, we have to remember that there is an SBC commission, and there are fees payable to the SEM, the CPA, and the MCDR, and the insurance fund in dollars. By the way, in the same rates we have been using under the transactions in Arabic. I mean, the same rates apply. But here they shall apply to the dollars, to the $1,703.5. And therefore, we can see how this transaction shall be carried out. I'd say here the books must be kept in Egyptian pounds. This is surely. This is from the legal point of view that the General Journal, which is the main accounting book in the SBC, it has to be in Arabic, in Egyptian pounds, not in foreign currencies, not in dollars, not in euros, not in any other foreign currency. And therefore, this will happen, and this we can see this in this way. Here we are assuming an example that the Blue Nile SBC has received purchase and sales orders from Arab and foreign investors who don't have Egyptian pounds but US dollars on January 12, 2017 as follows. And to follow the example, where is the first of all, the purchase order received. Here we have client Hamad, who is an Arab. His SEM code is 45701. His code in the SEM, in the stock exchange market in Egypt. He wishes to buy 1,000 shares of Al Baraka Masr Bank shares. Yani he wishes to buy 1,000 shares of this bank, which is Al Baraka Masr Bank shares. I would say here the code for these shares is saud.ca, and the price per share is in Egyptian pounds 11.66. He also wishes to buy 560 Kuwait National Bank Masr shares. The code of these shares is nbke.ca, and the price per share is 22.01 Egyptian pounds. Let us carry on. Here we have another sales order by a foreigner who is called Holland, and his code in the stock exchange market in Egypt, it is 534905. He wishes to buy two kinds of shares which are circulated or transacted in our SEM. 1,500 Faisal Islamic Bank Masr shares. The code is fait.ca. The price per share is in Egyptian pounds 41.75. In addition, he wishes to buy 900 Bank Crédit Agricole Masr shares. The code is CIEB, and the price per share is 22.65. The exchange rate for the dollar on that day, the day of receiving these orders, it was 17.75. Be careful about the exchange rate for the dollar. This exchange rate may change from one day to another. Be careful. At this stage, you have to translate these orders using this rate, not any other rate, the 17.75 piasters per dollar. Let us go and carry on and see the balances of the credit current account and adjustment account in US dollar with the clearing bank. They were 5,000 and 2,000 respectively. I mean that the balances of the credit current account and the adjustment account in US dollars with the clearing bank, they are respectively 5,000 and 2,000. Let us carry on and see what will happen. The transactions have taken place as follows. On January 12, both clients were requested to deposit $2,000 in credit current account with the SBC. They deposited the amounts in US dollars, in US banknotes, US currency. On January 14, the SBC has requested Mr. Hamad, who is going to buy Egyptian shares or securities, asked him to deposit the sum of $2,000 into his credit current account. He has paid immediately. He has paid this amount immediately. Yes, both of them, and I mean the buyer and the seller, they were requested to open credit current accounts, and both of them have deposited, each one has deposited $2,000. On January 14, the SBC has deposited the sum of $5,100 into the credit current account in USD with the clearing bank, which in turn has transferred the sum of $4,000 into the SBC adjustment account in USD or in US dollars. On January 15, the buying and selling transactions were implemented. They were carried out. But the question is, from where did we compute the $5,100 that the buyer has deposited with the SBC, such that the SBC has taken them to its current account with the clearing bank? On January 15, the buying and selling transactions were implemented in the SEM and were recorded and adjusted for on January 18. On January 19, the clearing bank has transferred $5,100 from the adjustment account to the current account. Then the SBC has withdrawn the sum of $6,500 from its current account in USD with the clearing bank. Is that actually, to be clear with you and to clarify this point with you, that the buyer has to pay the equivalent of the dollars of his purchases of securities in addition to the SBC commission at the rate of 0.5% and the SEM fee, the FCA fee, the MCDR fee, and the insurance fund fee. All these are added together, and the buyer is requested to deposit with the SBC the equivalent of these dollars or the total of these dollars, and which the SBC shall go and deposit with its current account with the clearing bank. But remember that the SBC shall not deposit its own commission with the current account of the clearing bank. It is not logical that the SBC receives its commission from the client and it deposits its commission with the bank, then come and ask the bank to withdraw the commission. This is not logical. That is why, yes, the SBC receives from the buyers, receives from them in dollars the value of the estimated value of their purchases, in addition to its commission, in addition to the fees. But it is going to deposit only the estimated amount of the purchases in addition to the fees that are going to be paid to the different authorities involved in the transactions. Okay, so let us go and carry on and see later on. Of course, the requirement is to prepare the purchases day book and the sales day book in US dollars for the above transactions. Then to make out journal entries and adjustment entry for the above transactions that have been settled in US dollars. Then to draw up credit current account and adjustment account in US dollars with the clearing bank. And then to draw up, and finally requirement number 4, to draw up clients, Hamad and Holland accounts and the books of the SBC in US dollars. You understand from this that we are going to prepare a purchases day book and a sales day book in dollars. And these shall be simply prepared by translating the total of the Egyptian pounds into the equivalent US dollars. The day books have to be in dollars. But when you come to requirement 2 and you make the journal entries and the adjustment entry for purchases and for sales, and then when you come to close out purchases account and sales account, remember that you have to translate the amounts in dollars into amounts in Egyptian pounds. I mean that the debits and the credits in the general journal, they have to be in Egyptian pounds but not in US dollars. This is a matter of sovereignty. This is a matter of, I would say, a legal point of view. You are an Egyptian, and therefore all transactions in the legal books have to be translated and have to be expressed in Egyptian pounds and not in any foreign currency. Let us go and see the answer. Here let us draw up the purchases day book and the sales day book in US dollars for the purchase transactions. Let us have a look at the purchases day book. On the 15th of January 2017, we have for Mr. Hamad, he bought, or he actually applied to buy two kinds of securities. The securities bought, they are 1,000 البركة مصر bank shares, and this the price per share, it was 11.66 as given before, and these are divided, or the result of the multiplication is divided by the exchange rate, which is 1775, and the result is $656.9. And this amount, we are recording it under the column of amount. Then another kind of securities bought or decided to be bought by this client, they were Kuwait National Bank Masr shares, and the price per share, it was 22.01 as given to you in the parameters, in the data given to you at the beginning, and the total in Egyptian pounds is 12,375.6 Egyptian pounds divided by the exchange rate, which is 1775 piasters. This makes a net in dollars, which is $694.4. So we have the purchases of the first security, their amount, their gross amount is 656.9, and the other one, the other security or the other share, the other kind of shares, it is 694.4. The total of them is given in the column of amount. You have the total, which is 1,351.3. Based on this total, we are going to calculate how much will be the SBC commission, how much will be the SEM fees, how much is the FCA fees, how much is the MCDR fees, how much is the insurance fund fees, and finally we have to add up all these together. So we have here, we have the result of the commission, the SBC commission. It is $6.76. The SEM, the FCA, the MCDR, and the insurance, all of them are making $7.75. These are the amounts added to the purchase price of these two securities. The purchase price is 1,351.9, and these are the commissions and fees, and the total amount that this client has to be debited with is 1,359.08. In this way, we can understand, we can see from the signs given to you that this day book is prepared in dollars. It is not translated into Egyptian pounds. Here there is no place for Egyptian pounds, except that we are multiplying the quantity of the securities by the price per share in Egyptian pounds to find out the total amount. Then we divide, as you have seen, we divide by the exchange rate per dollar, so that we reach the total amount of purchases for security 1 and for the second security, and so we added up, we calculated on this total all the commissions and the fees, and finally we reached to the amount 1,359.08, the amount with which this client shall be debited. Client Mr. Hamad shall be debited with this total, 1,359.08. You understand that the purchases day book? It is very simple, it is very easy. Don't include any value in Egyptian pounds. Let us go to the other day book, which is the sales day book. The sales day book here, it is for sellers, for those who sold the securities. And here we have Mr. Holland, who sold 1,500 Islamic or Faisal Islamic Bank shares and 500 bank Crédit Agricole shares at 22.65 pounds, and there above the Islamic Bank Faisal Bank shares, the price per share it was 41.75, making 62,625 divided by the exchange rate given to you. Then you have a total amount of the sale of the first security, which is 5,328.17. The other security, you have 900 shares times 22.65 Egyptian pounds, making it 20,385 Egyptian pounds divided by the exchange rate to convert them into dollars. Then we have $1,348.45. So the gross sale price of the first security is 5,328.17, and the gross sale price for the second security is 1,348.45. The total gross sales or gross amount of the sales of the two securities, it is, as you can see, it is 6,476.62. And based on this total, we shall also calculate how much is the SBC commission, the SEM fees, the FCA fees, the MCDR fees, and the insurance fund fees. And finally, we added up all these together. And you can see that we have just circled this total with brackets to mean that this is a negative amount. I mean that the gross sales for this client, it is 6,476.62, but we shall deduct from him the commissions and fees in the amount, the total amount of $37.31, giving the net amount, which is $6,439.31. You can see from that when there is someone who is buying, we add to his to the value of his securities, to the value of his purchases, we add the commission and fees. But for the sellers, we deduct from the gross amount of his sales, we deduct from the gross sales of sellers, we deduct the commissions and fees. I mean that he shall receive, Mr. Holland shall receive only $6,438.11, but not the gross amount, which is $6,476.62. Yes, he has to lose, he has to sacrifice, he has to give up the commissions and fees. Then let us go to the general journal. In the general journal, which is the main legal book here, you can see that when we are receiving cash from the clients, we debited cash in dollars, not in Egyptian pounds. We say cash, then hyphen, and US dollars account. It means that this is a cash account or a cash safe in US dollars, not in Egyptian pounds. How much is the total for both of them? It was 4,000. 2,000 by Hamad and 2,000 by Macron. They are two. Well, there is something strange regarding the names. But anyway, we have one buyer who is Hamad, and we have one seller who is Holland, not Macron. I'm sorry for this error. I'm sorry. So we have $4,000 times the exchange rate. We are having 71 Egyptian pounds. And this 71 Egyptian pounds, it is divided equally between the two clients, the buyer and the seller, to record the deposits received from the two clients in US dollars. Everyone paid $2,000. The total deposits are $4,000. They are all received in cash account in dollars, but every one of them is credited with his share only, which is $2,000. Okay? Then we come to the buyer. The buyer has paid the value of his purchases in addition to the estimated value of his purchases in addition to the commission and fees. So we are debiting a cash account in dollars, and we multiplying by the exchange rate and crediting the client who is Hamad account. Okay? Then the SBC has deposited the money into all the money it has received. It has deposited with the bank, with the clearing bank in the current account. Okay, so bank current account is debited, cash account in dollars is credited. Then the bank clearing account or the clearing bank itself has just moved or transferred this money from the current account of the SBC to the adjustment account of the SBC. Then when we come to purchases, we debit clients, we debit Mr. Hamad for the total amount of his purchases. In addition to the fees and commissions, we debited him, and we credited on the other side purchases account for the net amount of purchases, the original amount of purchases. And in detail, we recorded in the subsidiary column what are these purchases. They were two kinds of shares. We mentioned these. Then we have the SBC commission alone. It is credited. All the fees are credited, and in this way we make the purchases they book with one entry in the general journal in the same language, but the opposite way around. We are recording sales. Here we are debiting sales and crediting clients' current accounts. Why? Because the SBC, when it buys on behalf of the customers or the clients, and when it sells on behalf of the clients. That is why we are debiting sales for the sales of the Islamic Faisal Bank shares and the Crédit Agricole Bank shares in the subsidiary column. And on the other side, we have the credit current account of the seller, who should be Holland, not Macron. I'm sorry for this error again. I'm sorry for this. He should be Holland, not Macron. Anyway, but his net amount, the net amount which is going to be paid to him, as shown in the sales day book, we multiply this net amount by the exchange rate for the dollar. In addition to this, we recorded all the SBC commission and the fees. All these are credited. Then we come to the adjustment entry. In the adjustment entry, remember that we have purchases. In the first entry, it was credited. To close it out, now we have to debit it. So we are debiting purchases a current account with the amount that we have seen in the journal entry for purchases. And on the other side, sales which is debited on entry B, it has to be credited in entry C to close it out. And in this way, we are closing out purchases account and the sales account. In addition to this, we are also debiting all the fees accounts, the SEM fees, the FCA fees, the MCDR fees, and the insurance fund fees. All these are debited. And so we have how many amounts which are debited? We have 5 accounts, purchases in addition to 4 kinds of fees. What account is credited? We have only sales account is credited. If we compare the total credit of sales, which is 114,000.01, with these 5 accounts which are debited purchases in addition to the fees, and we compare between the two to find out how much is the difference between the two amounts, between the debit of 23,985.58 plus 16.6 plus 8.34 plus 52.72 plus 27.87. So this is the total debit. Compare it with the total credit of sales account on the credit side in the journal, then you have 114,960.01. In this way, we find out that the difference is debited, not credited, because the credit is more than the total debit amounts. When the credit of sales is more than the total debit amounts, then the difference should be, the complement should be in the debit side, which is here 90,868.81. This amount, we call it concluded. We concluded this amount. It was not given to us. It was not a data given to us. But we understand from this that there is a net increase in the balance of the adjustment account with the clearing bank, which is 90,868.81. That is why, opposite to this 90,868.81, we recorded bank deposit account. And this bank deposit account, it is concluded, but we have to convert this amount. This amount in Egyptian pounds, we have to convert it to US dollars. That is why the 90,868.81, it was divided by the exchange rate given to us. Then we finally have the amount in dollars, which is 5,119.37. Narration for this entry is to record the adjustment for the client's purchases and sales in US dollars, and to conclude the increase in the adjustment account balance with the clearing bank. I think now it is clear that whatever amount you found out in Egyptian pounds, you have to convert into dollars by dividing by the exchange rate on the date of the adjustment. Then we have these just complementary entries. We have here transferred from adjustment account to bank current account. We transferred the amounts in dollars but translated into Egyptian pounds. The same Egyptian pounds you have seen in the previous entry. Okay? Then we also, here again, the SBC is going to withdraw cash from its current account to its own safe. So debited cash account and the credited bank current account. And finally, the SBC is going to pay to the sellers. Here he is Mr. Holland, Mr. Macron again, I'm sorry for this. Here we have clients' current accounts. The net amount payable or receivable by the seller, who is Mr. Macron, which is this amount of dollars times the exchange rate, which is 1,775 piasters, and on the credit side we have the same amount credited to cash account, the same quantity of dollars multiplied by the same exchange rate. I would like to draw your attention to this fact. Here in this very elementary example, we assumed one single exchange rate. But in some other situations, you shall have more than one exchange rate for the dollar. It will not be limited to one single exchange rate. There could be an exchange rate when you are receiving from the buyers the estimated amount of their purchases. There will be another exchange rate when you are preparing the purchases day book and the sales day book. And there will also be another exchange rate, a third one, on the date the adjustment is made in the general journal or recorded in the general journal. So prepare yourself to this likelihood that you shall have more than one exchange rate for the dollar and not a single exchange rate for the dollar, as I have done right now. Is to show you how the fees, the different fees are added up together on purchases and on sales, and the totals. These totals that you can see in the last row, in the bottom row, these totals are debited in the adjustment entry. You can check out. Then here we have ledger accounts for the bank current account. How much was its balance? How much are the amounts received from the clients? How much are sent to the adjustment account? How much are withdrawn? How much are paid in cash to sellers? And finally, how much is the balance of the bank current account? I mean, the bank current account, there was a balance, there was a deposit, and there also was a transfer from the adjustment account, and a transfer to the adjustment account, and also a withdrawal in cash, and finally you have a balance of $3,600. Bank adjustment account, this is the beginning balance, it was debit, then there was a transfer from the current account, then there was the sales revenue which is added to this balance, and then finally there is a transfer to the current account from the adjustment in the credit, and finally we have a debit balance of $7,376.62. Then we go also to the clients. We have Hamad and we have Holland, and every one of them, as you can see, they deposited 2,000. The buyer has deposited 2,000, and they deposited again 2,000, and finally there were purchases in his name in the amount of $1,359, and there is a balance, a credit balance remaining to him, which is $2,640.92. It is carried down, brought down, his balance is credit. I mean, he is still having a credit balance with the SBC. This is normal, by the way, and there should all the time be a credit balance for every client with the SBC. His balance must not be debited. It must not be debit. He must have a credit balance. Then in the same way, the seller, whether we call him Holland or we call him Macron, it doesn't matter, but it is here also there was a deposit by him in the amount of $2,000. The sales revenue also is credit to his account. Then he has withdrawn or he has received the cash from the SBC in the amount of $6,439.31. I mean $6,439.31. These were withdrawn or received by him in cash, in foreign cash, in dollars. And finally we have a balance remaining to him, which is $2,000, carried down and brought down. And therefore it is natural that the bank accounts, the current and the adjustment, to have debit balances. Yani all the time they must have debit balances, while as the clients, they should always have credit balances but not debit balances. This is contradictory to the rules of handling transactions in the stock exchange market of Egypt. This is the end of our lecture for today. Very much.